Gold or Bitcoin? Which is the safer haven in 2024? A question that sparks heated debates among investors. As we navigate the investment landscape, we encounter myriad opportunities, each promising its own unique set of rewards. The key to successful investing, however, lies in diversification. By spreading our investments across a variety of assets, we can mitigate risks and increase our chances of reaping substantial returns. Enter the age-old debate. Gold or Bitcoin? Gold, the traditional safe haven, has been a bedrock of stability for centuries. It's tangible, finite, and has intrinsic value. When economies tremble and currencies falter, investors have long turned to gold as a safe harbor. It's the old guard of investment, reliable, unchanging, and steady. But as we stand on the brink of a new era, a digital contender has emerged. Bitcoin, the pioneering cryptocurrency, represents a new-age digital asset. It's intangible, decentralized, and its value is driven by supply and demand dynamics of the market. Bitcoin offers a level of potential returns that gold can't match. Yet, with high rewards comes high risk. The volatile nature of Bitcoin has seen it swing wildly in value, sometimes within a single day. It can be a roller coaster ride that's not for the faint-hearted. On the other hand, while gold doesn't have the same meteoric rise potential, it has proven to be a steady store of value. Its price may not skyrocket overnight, but it also won't plummet without warning. In the end, it's not about choosing one over the other, but about understanding how both can fit into your investment strategy. Gold, with its long history of stability, can provide a safety net, while Bitcoin, with its potential for high returns, can be the wild card that propels your portfolio to new heights. Weighing the pros and cons of both gold and Bitcoin, considering their volatility, potential returns, and the role they play in diversification, is crucial to making an informed investment decision. Understanding the pros and cons of both gold and Bitcoin is crucial to making an informed investment decision. Let's dive deeper into the world of gold, the timeless treasure. Gold, with its age-old allure, has always been a trusted safe haven for investors. One of its key advantages is its stability during economic downturns. When stocks plummet and the economy hits a rough patch, gold tends to maintain its value, providing a safety net for investors. Another compelling advantage of gold is its universal acceptance. From Wall Street to the smallest village market, gold is recognized and valued. Its universal appeal transcends borders and cultures, making it a truly global asset. But what really sets gold apart is its intrinsic value. Unlike paper currency or digital assets, gold has value in and of itself. It's not just a symbol of wealth, it's a tangible asset that you can hold in your hand. Gold's resilience and universal acceptance make it a reliable choice, especially during times of economic uncertainty. Moving on to the digital frontier, what makes Bitcoin an attractive investment? Let's delve into the world of cryptocurrency, where Bitcoin holds the crown. An aspect that sets Bitcoin apart from traditional investments is its potential for high returns. Yes, it's volatile, but this volatility has led to unprecedented gains for early adopters and savvy investors. What's more, Bitcoin's acceptance is growing at an impressive pace. Businesses, large and small, are starting to accept Bitcoin as a form of payment. This growing acceptance is a testament to the cryptocurrency's potential and staying power. Another factor to consider is the appeal Bitcoin holds for the tech-savvy generation. Today's younger investors are comfortable with digital technology and are drawn to the innovation and potential of Bitcoin. Bitcoin is not just a currency, it's a technological revolution. It's a digital asset that's pushing the boundaries of what we consider as currency. Bitcoin's potential for high returns and increasing popularity, particularly among younger investors, paints a promising picture for its future. However, every coin has two sides. What are the potential risks of investing in gold and Bitcoin? Let's delve into the less shiny aspects of these investments. Starting with gold, it's important to remember that gold is a physical asset. This means it requires storage. Whether you're stashing it in a home safe or a bank vault, there are costs associated with keeping your gold secure. And let's not forget about insurance. These costs can chip away at your investment returns over time. Then there's liquidity. While gold is universally recognized and can be sold virtually anywhere in the world, it's not as easy to sell as, say, stocks or bonds. It can take time to find a buyer willing to pay a fair price, which could be problematic if you need to liquidate your investment quickly. Now let's turn our attention to Bitcoin. The first thing to mention is volatility. Bitcoin's price can skyrocket or plunge in a matter of days or even hours. This roller coaster ride can be stomach-churning for investors who prefer stability. Furthermore, Bitcoin is a relatively new asset class. It's less than 15 years old and its future is still uncertain. This brings us to regulatory risks. Governments around the world are still figuring out how to deal with cryptocurrencies. New regulations or bans could significantly impact the value of Bitcoin. Lastly, while Bitcoin transactions are secure, the platforms where you buy and store Bitcoin may not be. We've all heard the horror stories of exchanges being hacked and investors losing their entire Bitcoin holdings. In conclusion, there's no such thing as a free lunch in the world of investing. Both gold and Bitcoin have their downsides. With gold, you're dealing with storage, insurance, and liquidity issues. With Bitcoin, it's the volatility, regulatory risks, and potential security concerns. Despite their potential benefits, both gold and Bitcoin carry their own set of risks that investors must consider. So, as with any investment, do your homework, understand the risks, and invest wisely. So, gold or Bitcoin? Which should you choose as your safe haven in 2024? The question isn't as straightforward as it seems. Both assets have their pros and cons that we've discussed. Gold, the time-tested and universally accepted investment, offers reliability and a hedge against inflation. Bitcoin, on the other hand, the digital gold of the 21st century, presents an opportunity for high returns, albeit with high volatility. The decision, however, should not be a one-size-fits-all verdict. The choice between gold and Bitcoin should hinge on your individual risk tolerance, your investment goals, and your understanding of each asset. If you prefer stability and have a conservative investment approach, gold could be the choice for you. But if you're willing to embrace risk for potentially higher returns and have an understanding of cryptocurrency, Bitcoin could be your golden ticket. Whether it's gold or Bitcoin, the choice ultimately depends on you, the investor. Always remember, informed investing is smart investing.